This is the Friday, November 10th, 2017 version of the Market Plus segment. Joining us now is Brian Roach. Brian, welcome back.
Thanks, Mike.
We did not get a chance to discuss cotton, and you're a Florida boy. You travel quite a bit. Georgia got hit hard by Hurricane Irma. Texas got hit hard by Hurricane Harvey, and yet USDA still thinks there's a pile of cotton out there. How realistic is that?
I mean, I think you have to run with the USDA numbers on whatever they report, because that's what makes the market. Whether it's real or not, it doesn't really matter. But I think they do a great job of their estimating. The cotton number was kind of quiet. The U.S. stocks number came up. World numbers came down, but that's all on domestic consumption. And I've talked about this before, that all the world economies are all in growth mode. We're not talking about anybody having problems. We're talking about inflation. Is that an issue? And so I think cotton probably has some good markets ahead of it. The question will be does that Mid-South area grow cotton over soybeans, and what's those ratios look like? And if you look at the kind of ratios we had last year, we got a little more cotton, not a lot, and bean numbers are pretty solid.
Yeah. Last year I heard growers switching from corn to cotton, not necessarily beans to cotton. Is that something you think we might see again this year, unless corn can bounce out of this trading range?
Yeah, I mean, the Mid-South, the soil types, the weather type, it's not a great
corn growing area.
It's not a great corn growing area. And so with high-priced corn, it made sense. And now I think you're going to figure out what the real ratio is between cotton, cotton and soybeans, and that'll be really the picture for the Mid-South.
All right. Now let's get to some of our questions here from our followers on social media. This one is from Travis on Facebook. He's in Elk Creek, Nebraska. We're talking about huge corn carryout numbers. Travis wants to know, aside from perhaps 2 consecutive years of 1988 or 2012 type droughts, what would or could change the tide of low grain prices? Well, it'd have to be a pretty big weather event, whether it's in the northern hemisphere, which includes China, or the southern hemisphere, or Europe. And so you have major growing areas that, and those are all, except for Europe, major exporting countries, and so that would probably be the type of event we'd have to look at. You don't think we can just rely on increasing demand slowly? Either it's ethanol, whether it's livestock consumption, that's just going to take too much time to really turn the prices around. Yeah,
those aren't going to create big enough moves that change corn prices from a step function standpoint. I think what we have is we have a corn market that wants to, the USDA's range was 280 to 340, 350. Futures market moves, say 340 to 440, and I think we have that type of market. Growers just have to be able to make those kind of numbers work in their marketing and and execution. And so I think we have that kind of market going forward. Do we have something north of that? Not without a problem. But every year the market's going to be concerned about production when demand numbers are as large as they are.
You bet. And that's something we've seen, I think, especially pronounced in the soybean market. Right. That's the one where demand has been so strong that even though production has been quite phenomenal, we're still getting a little nervous about it, and we get the nice little pops.
Yeah. Same scenario in beans. I mean, we have a $9 market that has run $10.50 to $10.80, so it's almost a $2 swing in board price. And so I think we have those types of markets to look forward to, and possibly more in the bean market. You look at China's import requirements, they continue to go up. Their swine herd a couple years ago was knocked down quite a bit, and now they're beginning to rebuild that, but that's created a net need for more pork, for more protein, and so we're going to benefit from that, even though we're just coming off of big crops in South America and the U.S.
All right. Now, RL in Nebraska on Twitter at $7 corn, RL's an optimist, wants to know what should he be doing with his overrun bushels that have been delivered to the elevator. And let's talk corn first of all. Do you pay commercial storage this year?
A lot of guys are not doing that, and I understand why, and I'm working with them to manage that.
Okay.
With the carries in the market, commercial costs have inched higher. The 3 to 4 cent number is, I'm hearing 5 and 6. And so when you talk about those kind of numbers, the elevator has big carries. They can make a lot of money on that. Storage costs are going up. I think the farmer has to look at maybe cutting bait on some of those costs, using an extended price contract of some sort to retain ownership through the elevator. but don't get married to it. You know, there's still a job to do on the future side of that once it's time. Not when you want to deliver, but when it's time.
You bet. On the soybean side, you mentioned there's some optimism there in that market. If I've got additional bushels of soybeans sitting around, I got my 10 days left at the elevator, I pull the trigger, put the cash in my pocket here or soon for cash flow, or might it be worth paying a little storage on soybeans given the demand picture that's out there? Yeah,
I think for beans, the cost for bean storage relative to the value of a bushel of beans makes more sense. So we've been recommending that growers put it in commercial storage with the plan that we're going to have it marketed through the first quarter of 18. And so our plan is not to roll that into the summer. This wouldn't be a summer marketing plan. This would be, we're going to make decisions between now and into March or before on what we put in commercial storage. So I think that makes more sense.
We're putting it in there, budgeting 3 to 4 months of storage on those beans.
This isn't, not a long-term play. Last year, there's 3 big rallies last year. 2 of them came in the front part of the year, and if that were to repeat itself this year, then we're gonna move those bushels.
All righty. And finally, we've kind of touched on this a little bit, but I think we can go a little bit deeper. Ty in Washington, Iowa, at Ty Renner, wants to know, with such a big crop and plenty of old crop yet around, if China or any country bought a lot of corn, would it be enough to move price upward?
Yes. You have to remember the futures market is terribly efficient. Very efficient at forecasting what might happen or transpire as a result of an event or a trend. And so I think that China is inching down their ending stocks. They've gone from 3 years ago 110 million to 100 to 79, and so they're slowly working off those stocks, if those are accurate, and they're growing more beans than corn, and so that situation may rectify itself faster than we think. And there's still an unknown about how many of those bushels they're sitting on are good.
Right.
Will they end up in the ethanol business that they've cranked up as well here recently?
And that's the other story. I mean, we do see China moving to a 10% nationwide blending rate for ethanol. Can they meet it? What are your sources in the market telling you? What's the chatter? Can China do that domestically, or will they be buying American and or Brazilian ethanol?
I think they'll do both.
Okay.
I think especially if they're going to allow non-Chinese companies to build these plants or somehow use the technology that's already out there. But I think that they have the capability to start up ethanol plants like anybody else.
Okay.
I think that they'll figure out how to run them and make it work. And that will be that'll be a big deal in the corn market, over the next 3 or 4 years.
Yeah. Could we see a repeat of the ethanol boom that happened in this country, 2005 to 2010 in China?
Yes.
Would it have a similar price function on corn?
Well, I think it just puts more demand into the picture and that we don't have today. And if you look at the U.S. balance sheets going back 10 years, ethanol played a major role in driving demand up. And China were to do the same thing. They have a bigger population.
Yep.
More cars being sold over there, bigger car inventory. Their demand picture is far bigger than the U.S., so I think it would have a huge upside to it.
Now, before we let you go, you mentioned crude on the program. You talked about the economies globally, ticking right along. We're seeing record values in stock markets around the globe. How high can crude climb before we really start to aggressively move rigs back into place and crank production right back up?
The rig numbers actually climbed, and then they kind of tapered off. This week we picked up 9, I think, in today's report. So you got to think that the shale production in the U.S. will come online very quickly, that they're well capitalized or better capitalized than they were before. So as we get into the high 50s here, we're going to drag crude into production. But I will say demand numbers are good. World economies that use crude are doing well. I think that's what you have to look at. Gasoline demand and crude are both running big counter-seasonal moves here at this time of year where they would normally be selling off. We're actually up making bigger or higher prices, and so I think that's a positive, and that's a result of what you're seeing with economic news around the world.
All right, Brian Roach, thank you so much for taking the time to talk to us today.
Thanks, Mike.
We are still seeking your questions on the basics of trading or trends in the marketplace. Join in and send us your questions in video form. You can direct message us on Twitter or send an email to markettomarket@iptv.org for details. Join us again next week when we'll get a slice of Americana in the land of Lincoln, and Mark Gold will sit across from me at the Market to Market table. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.